Hello there, my name's Paul Stankiewicz. I'm the principal and owner of Paul Marks & Co Chartered Accountants. Now, I think tax avoidance is a confusing subject these days, and I want to explain some of the principles involved. Now, there's still a big distinction between tax evasion and tax avoidance. Tax evasion is always illegal and means breaking the law by knowingly doing something such as hiding income or capital gains from the taxman. Tax avoidance, however, is a legal way of arranging your business or personal affairs so as to minimise your tax liability. Now, the government in recent years has sought to make a distinction between what it regards as ordinary tax avoidance arrangements and something it calls abusive or aggressive tax avoidance arrangements, and has put in a lot of legislation to counter these abusive tax arrangements. Now, obviously, the important question is, what's the difference between ordinary tax avoidance and abusive tax avoidance? Well, in the final analysis, that will be tested in court and is a matter of interpretation. It can either be tested in court or via a tribunal or by a panel of experts. Now, one of the important indicators will be whether the purpose of the arrangement, when viewed objectively, was mainly to avoid tax or whether there was some commercial reason for the arrangement. Also, whether the favourable tax result was one that Parliament would have foreseen when it enacted the legislation, and critically, whether that course of action could not be regarded as reasonable. Now again, whether something's reasonable or not is really subject to interpretation. HMRC have sought to test many of these abusive anti-avoidance schemes and have won many high-profile cases in the last few years. They've consistently said they will challenge anything they regard as aggressive or abusive tax avoidance arrangements, and they have many tools at their disposal to do that now. Parliament has also shown that it's prepared to enact retrospective legislation if it loses in court in some cases. Most reputable tax advisors these days won't advise their clients to participate in these high-risk anti-avoidance schemes. Usually, if something appears to be too good to be true, it is too good to be true. And you may be looking at HMRC knocking on your door at some point in the future. If you want to make sure that your tax arrangements are ordinary anti-avoidance rather than abusive anti-avoidance, then you really need to be talking to a reputable tax advisor. So thank you very much for listening. If you need further help, please contact me on 0800 689 3084 or email me at paul@pmarks.co.uk. Thank you.